Welcome back, everyone. My name is Michael LeBlanc, Senior Portfolio Manager for Canaccord Genuity Wealth Management and partner at LLC Private Wealth. And thanks for joining us again for our tactical portfolio update. We're starting off year 2024, so we thought we'd review what happened in 2023, what successes we saw in the portfolios, what you should have seen in your own portfolios if you have some portfolios outside of here, and a little bit of what we can expect for 2024. On that note, before we get started, always remember these videos are for information purposes only. Always contact us to ask questions about your particular situation, your particular portfolio. They're not to be taken advice. They're for education only. Always make sure you do your own research and due diligence. So with that, let's kind of jump into what we saw in 2023 in the portfolios. So just despite a very, very rocky year in 2023, the portfolios actually did exceptionally well. We were very happy with them. 2023 started off on a pretty strong note. If you followed our videos through the beginning of the year, obviously the big winners at the start of the year were the tech names, the big what they call FANG stock or FAM stocks now, with Meta changing the name for Facebook. Excuse me. They had a really start strong, really lead in the market. And in fact, if you took out those, I think there was the glorious seven out of your portfolio, the portfolio, you pretty much saw negative returns in the first half of the year, except for those stocks, really bringing up the indexes. Through the summer, of course, it was pretty negative, especially on the Canadian side, but also down in the US and globally. It looked like the year was going to end up pretty awful, negative for the year. But we saw that turn around really strong October, November, and strong through December, and saw the markets finish off quite well, or at least in the positives. And the TSX up here in Canada actually wasn't a great year, just around 2% for the year on the TSX composite. So if you saw something around those returns, you're probably heavily into the Canadian market or the energy sector. The US obviously saw stronger again with those FANG stocks coming back. The tech stocks really rallying in the fourth quarter, bringing the returns up quite high, well into the double digits, and a bit that even on the broader S&P 500, also high in the double digits. So overall, despite the volatility we saw in 2023, a good year in the portfolios, in our portfolios here. Now, everyone knows if you're with us, we tailor make our portfolios to your situation. So I'm going to give you some broad numbers. They might not represent your exact portfolio, but you would have components of these inside that portfolio. So one of our indexes we run on our portfolio is our global portfolio. So this is just international, mostly US, but can have international stocks, can have Canadian stocks, but mostly outside of Canada. An amazing year. It actually outperformed all the other managed portfolios on the Canaccord platform here at north of 24% last year. So really great returns. If that was the concentration in your portfolios, or what your target exposures were. We also had on the Canadian front, or the North American front, I should say. So if people have Canadian portfolios that play mostly within the North American market, a really strong year, north of 18%. Again, beating that category for Canaccord on the benchmarks. And then the kind of more conservative, or the what we call 60-40 or balanced portfolio. Although if you've watched our videos before, you know we don't subscribe to the 60-40 strategy. But if you were going to compare to a balanced portfolio, that's as close as you can get with ours. Coming in at a really strong 15%, or just about 15% for the year. So really strong returns coming out of 2023 going into 2024, which we love to see, especially when it was a very difficult year. Most of the returns that we got out of our portfolio was due to having the asset allocation right. Some of the names were great. We had some really strong exposures on the energy front. Of course, oil and gas didn't do that well through 2023. We did quite well by pushing a lot of our energy exposure to uranium last year, which performed quite well. We also did well on the tech front, not necessarily going for all the big tech names. That's not the style we like to have in the portfolio. We like to concentrate more off benchmark. You've probably heard my analogy in the past of, we don't always kind of if gold mines are doing well or gold's really doing very well, we prefer to focus on the companies selling the pickaxes. So the companies on the outside or the outskirts doing really well, servicing the main industry. And of course, one of the ones that's been in the portfolio for a long, long time, Visa and MasterCard, continue to do well as they take advantage of, whether it's been Amazon or online shopping or online spending, most of those transactions taking place through the credit card companies. We also did quite well on the tech side with the Celestica in the portfolio. Celestica is a board manufacturer, so Celestica taking advantage of companies just needing more boards to be built, whether it was for AI or for any other technical uses. Celestica has been a big winner in the portfolio as well. We've trimmed all these names several times through the year as we like to take profits as the gains start to build up, and we'll continue to do so into 2024. Across that, we did have some of the bigger names, of course, Apple and Microsoft, which have continued to perform well on the tech front. We also had pharmaceuticals doing well in the portfolio, some broader exposures on some of the covered calls on the banking strategies. So overall, really, the diversification worked amazingly in 2023. We are very excited about 2024 as we saw the big theme of last year, of course, rising interest rates. How do we protect the portfolio against that? Of course, we struggled with the portfolios that had more of the income strategies with, bonds taking some negative returns in 2023, and utility companies and even the Canadian banks all taking negative returns in 2023 because of that higher interest rate pushing down profits on those areas. That being said, the general theme coming out of 2023 is that we've hit peak interest. Maybe we've not. There's still a chance we could see another hike come in, but the odds are we're more likely to see a cut or stay where we are for a longer period of time, which is fine as well for a lot of those utility and bank companies. That's okay too, because what they were struggling with last year was, if you look at a utility or a bank, the stock price not going up because of the higher interest rates, putting pressure on their profits. Well, at the same time, their dividend yielding around 6%. And at peak, we saw guaranteed cash getting close to the 6% mark, and in some cases touching 6%. Cash and guaranteed money has come off those highs. It's actually heading below 4, heading below 5, heading towards the 4% mark. So now people are looking, okay, well, how can I get higher yield? I can't get it in cash anymore. I've got to look at it elsewhere. And then, so people are starting to trend to those dividend paying stocks again. And with the higher or the more hikes, not likely on the horizon or the outlook, could still be there. Don't want to say for sure, but the chances are we'd have a hold or a cut going forward. That releases the pressure on the capital upside on those stocks as well. So those going into 2024 are looking attractive. They were tough last year on the income portfolios or people who are more income bent, but patience will pay off because what we did do in 2023 is start to focus a lot of the portfolio on a covered call strategies. So covered call strategies, I won't get into that. That would be a whole long video on its own. But basically, it's the ability to earn a premium on the dividend without taking too much risk. The only risk you're taking is a little bit of upside opportunity risk if the stock were to shoot up suddenly, but you'd still get value of that jump for your stock. You would just have to rebuy back again. Again, I don't want to get too much into the strategy, but the covered call basically increases your yield. So we've been able to add to the portfolios over 2023 for the 2024 year. Different positions, including the banks and utilities. The banks yielding north of 10% with the covered call strategy, and the utilities north of 8% with that covered call strategy. And we have one on the fixed income also, on the bond side of things, yielding 10% with the covered call strategy. So really taking advantage of the tough year of 2023 on those sectors to build that into the portfolio and put us into a really exceptional position for 2024 when it comes to yield, particularly. And yield can make up a lot of returns, especially when you're talking between 8 and 10% on your yield front. Just adding with before the stocks or before the underlying securities even start to gain or potentially gain. That being said, the other thing you're going to see in your statements on the tax front from 2023 is maybe some capital losses. Certainly not too much capital gains, because we were able to take some of those positions that suffered. We were able to crystallize those losses in 2023, clean up the taxes, and put us in good shape coming into 2024 for tax season. Versus 2022 and 2021, where we might have had some capital gains. 2023, we've got really good returns, and we were able to offset most of those returns through some crystallized losses in some of those areas that had some downward pressure. Didn't affect the overall return of the portfolio, but it did avoid the extra taxation that we would have seen otherwise coming out of a strong year like that. So that's pretty much for 2023. We're really excited about how things came out. One of our New Year's resolution is to make sure we get you these updates on a regular basis. I know the second half of last year, they were a bit sporadic. We had some staff turnover to get these videos out to you on a regular basis. That's all been cleaned up. So for 2024, look for these. So if you want to have these on a regular basis, let us know. We love to hear from you. You can subscribe if you're on YouTube regularly. You can subscribe to our YouTube channel. You get notifications for any new videos that we put out. We will be putting out more content. Remember, you can always go to mikeonmoney.com. That's where I put out other content other than the tactical portfolio, but also investment strategies. And we're also going to be doing a lot more interviews with Harold Leishman, business partner, who's works on the smaller cap, which is also, we're very excited about that outlook for that year. The last thing I want to mention on the tactical portfolios, we did launch in 2023, by the way, a new investment strategy. We haven't kind of gone out with it publicly yet because we've been running it for 2 years, kind of in the virtual environment. We did launch it, funded in 2023 to start building some returns. I can't quote those returns because they don't have a 12-month track record, but this portfolio is an all cap portfolio. So it's targeted anywhere from small cap all the way to the large cap, and it generally is diversified across that spectrum. It's pretty much an off index. We don't try to benchmark this thing. We want to find where the real value, where the real niche opportunities are out there. It's very much torquier. Its returns are expected, we target them higher than our general tactical portfolios, because it is looking for more momentum. It is looking for higher returns. It will be a bit more volatile. So someone who's, it'll be only interest to anyone who's looking for higher returns. We will keep you updated on the performance of that. It's been doing spectacular. But if you're interested in that, reach out to us. Happy to talk to you about the philosophy, strategy, and what the names and how it's been doing in there. Anyway, all that has been happening in 2023. Look forward to talking to you in 2024. And remember, reach out to us. The beginning of the year is a great time to revisit your strategy, visit any of your other portfolios that you have, see how they've done. Happy to review those with you, talk about what you might want to be looking for 2024 and beyond, and always keep in mind to really take a look at whether you're getting full value for the returns that you are experiencing, but also to make sure that you're not over risked. Make sure if you had a great year in 2023, that's amazing, but make sure that that's within your risk profile, because you don't want that to collapse if you're overexposed to one sector or another sector that might be at risk. So with that, I will leave you. Take care, and we'll talk to you in about a week. Thank you. Bye.